Hello traders, happy weekend and welcome to my weekly Forex forecast. Vladimir here from Traders Academy Club, and in this video I would be covering two very interesting opportunities the way I see them. It would be the pound dollar and the oil. So let's go to the charts, but right before we do that, I would like to ask your support and your help. If you appreciate these videos and you find them useful, please hit the like button below the video and subscribe to the channel if you still didn't. Feel free to share this video with anyone who you believe can benefit by watching that, as it is open for the community. And thank you very much in advance, of course, to all those of you who take the time, support, and help. So the pound dollar would be the first interesting analysis we have here, and a very interesting trading opportunities. Who would believe that only about a couple of months ago the pound dollar was trading around the 105 and lower, when everything looked like a crisis, when everything looked like, oh my god, the pound is going to below the parity level, boom, everything turned around, the pound is back to 120 so far. So despite all the crisis the UK went and still go through, the reaction to all the recent changes happened in UK lead to a beautiful rally. Now the question is, until when this rally will continue? And basically I think we are running to key levels where I believe a bearish reaction is expected from. So let's start with the weekly chart. We can clearly see a falling resistance line, and we can clearly see a couple of key swing highs, which will be used as supply area. Going down to the daily chart, we can see that we are very close to the key supply area level. Now, the interesting part here is, if you take a look on this cloud here, this pin cloud, this is based on volume profile. Now, according to this indicator, to download my indicators, go directly to my blog, VladimirRibakov.com, then follow the tab of my strategies and courses. Click on Vladimir's in-house indicators. This is the marketplace I'm developing together with my team. And here you would be able to find all the indicators you would like. Many of them are also available in free version. Okay, so just scroll down, choose the indicators you want, click to download, install, and enjoy. What we can see here is that the bigger the volume is, the more transactions went through the specific level. Okay, this is the principle of volume. Okay, the bigger the volume, the more transactions there are, which means there is more, we can say, some sort of a fight between the buyers and the sellers. This was the last place where the sellers took control, and that corresponds beautifully to this beautiful cloud, the volume profile cloud. Okay? So as long as this area holds, there is a very serious assumption that rallies, every rally from here would be potentially like the last attempt by the buyers before sellers take control and try to push it lower. Now, besides these levels, what is interesting here to me is that if we examine the rally that we currently see on the daily chart, we can clearly see a structure of higher highs, higher lows, but look how it is losing the momentum. Every rally is with slower and smaller and weaker momentum to the upside. From my point of view, this is the sign that the buyers are slowly losing their steam. And if we go to the 4-hour chart, remember the levels we marked from the daily and from the weekly. That's where I believe every push we might see, and yes, that could really happen, like a last attempt to rally, should provide a following sell opportunity. So higher highs on the chart, if they manage to go and complete another lower high on the MACD, or ideally together also RSI, this could provide an amazing opportunity for a bearish divergence to complete and the bearish correction to begin. Let me know, what do you think about the pound dollar? What would you expect from this pair in the comment section below? Also, if you have any questions about anything I just explained, then don't hesitate to ask in the comment section below. The next one would be the oil, which I find very interesting, and here is why. We have, and I'll show you in a minute, we have here two classical Fibonacci expansions trading zones, and they both happen to be around key psychological level. The first one would be around the 80, the other one would be around the 75. So if we plot Fibonacci expansion on the first leg, and we'll do the same on the second leg, here is what we get. The first key zone is right here. As you can see, surrounded around the 80. Slightly higher, no problem, but that's the zone. The next zone of expanded Fibonacci is slightly lower, around the 75, right at that zone, as you can see. Now, why do I find these levels so critical and interesting? Okay, remember the measurements we just did on the 4-hour chart. Let's go back to the daily chart and see what potentially is happening here. While the daily is making clear 3 bearish waves, okay, and they start to build up beautifully, take a look what happens on the weekly chart. At the end of this cycle, we are getting very close to key supportive areas. Okay, there are several on the way. And besides that, a potential bullish divergence is building up. So while the chart is making the lower lows, the market is potentially building up higher lows, which would create and complete a bullish divergence. But until that happens, the bearish pressure is on. And I believe that we first of all should see the price dropping down to this first box until potentially, I say potentially, because not me and not anyone else can predict how the market will really react. But if we do complete the lower lows on the chart and higher lows on the indicator, this is a good zone for some bounce in the bullish direction. Okay, if the first zone is not reacting to the buyer's attempt there, then the next area here is much more massive, and that's around the 75, and a very reasonable zone as well for the price to drop down to and to complete the divergences we saw on the weekly chart, together with the weekly levels and the 4-hour chart expansions on these Fibonacci measurements. So the oil, the instant bearish pressure is yet here and yet ongoing, and should be taking the price lower. But once we enter the key trading levels, this would be a place to consider getting out of the sells and look for reversal setups to the upside. So that's the two opportunities I want to share with you, which I find very interesting. Let me know if you have any questions about anything I explained below the video in the comment section. Share your views. Feel free to share this video with anyone you want. This is open for the public, and I invite you to join us in our trading family, Traders Academy Club, and enjoy your access to our full free VIP price action course, real-time trading ideas, real-time trading education, and amazing trading community. Thanks for your time watching this video. I wish you and yours all the very best, and I'll see you soon with more. Bye for now and good trading.